Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today is one of my favorite episodes. We're welcoming a brand new author into our Mission Matters community and into our best-selling business leaders book series. So her name is Oksana Malsheva, who's managing partner and CEO over at Sputnik ATX. Oksana, first off, hey, I just want to say welcome to the show and welcome to the community.
It's my pleasure. Thank you so much. It's such an honor to be part of this journey.
Oh, well, it's our honor to work with you as well. And we're going to talk about a lot today. So we got a lot of business owners, entrepreneurs, executives that watch this show, and founders. We're going to be doing a deep dive into founders and what makes sense and what kind of founders you look for, what kind of businesses you look for, really what you're doing also at Sputnik ATX. But before we get into all of that, we'll start this episode the way that we start them all, with our Mission Matters Minute. So, Oksana, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission. Oksana, what mission matters to you?
That is such a great question. One of the reasons I love being here. Our mission is our name, Sputnik. Sputnik had showed humankind what's possible and made us believe it what wasn't possible before. So for us, we come to work to elevate our founders' trajectory. Our mission is that trajectory in life and in business after encounter with Sputnik should be significantly higher than that was before. And if we accomplish that, good business and money will come.
Yeah, that's great. And I love bringing mission-based individuals on the line to share, their mission, what wakes them up in the morning, what gets them fired up to go out there into the marketplace and to make a difference. So again, great to have you on. And just to get us started here, so let's go a little bit further back. Like, how did you get started in business and really on this path to launching Sputnik ATX?
Well, I might mention that I'm an accidental venture capitalist. If you were to take me back to my college days, the idealistic physicist in training in the former Soviet Union, I would have never imagined that I would be a venture capital professional, run a venture capital fund in Austin, Texas, of all places. Who would have thought, right? Like, that was not on my world.
What do you mean? Isn't that obvious? No.
No, listen, truly the only course that might have related to humanities and economics in my university's curriculum was the history of the Communist Party. So you could imagine how long a journey that is. Yeah. But in a way, if you were to look back, that's kind of a wink to my younger self and maybe a wink to people who are truly determined to have a plan. I love you, I admire you, but sometimes you have to have universe take you where it means to take you and pursue your individual passions. Every part of my journey I loved. I was trained to be a PhD physicist, and I got it at University of Pennsylvania. I worked in consulting at McKinsey. I was part of marketing strategy team at Motorola at the time of Razr. I was an investor after that. And looking back, those building blocks, which I love individually, had put me in position to be really well prepared to do what I do right now, which is to work with the early stage founders. I could not have designed a better training. The life had designed it for me. What I did in the moment is pursue them with vigorous passion and try to get better, but also keep my eyes open for where my journey could take you. So to sum it up, an accidental but super happy venture capitalist, do it with conviction. And funny enough, when I was at McKinsey, I may have used small portions of my physics journey, similar, at Motorola, may not have been applicable. Right now, I could guarantee you that every single bit of my training is being deployed at one time or the other in my job as a venture capital. So here we go.
So I'll tell you, lots of different things you could do with your background, with your training, with your skill set. And I'm not putting words in your mouth. I'm saying this, I'm not putting this on you, but let's just say founders, business owners, we're not the easiest to work with. So I'm putting that on me. What drew you to, or what draws you to that passion to want to, work with founders and help them succeed?
God, I think the favorite part of my job is working with founders, and several reasons. While we are not the easiest people to work around, we are also the ones, wallflowers have never changed the course of humanity. And I think the most amazing thing to me about, because being a naturalized American, I get to appreciate a lot of things that people here might have for granted. Our capitalism is the fact that you could start a company and take it somewhere. The fact that you were to look at, stock market have done funky stuff on us recently, but if you were to look at the top 10 by capitalization, I guarantee you that there would be at least half of it that was not on that list even 30 years ago. These were the companies that were funded by venture capitalists just like myself. So because of that, when you see the founder who is on the mission to change the world, and you could help them make it from idea to a smaller business to a bigger business, grow the team, grow themselves, and really live 10 years in the future, that to me is amazing.
Yeah.
Another thing is I get to do a variety of things. Sometimes people who know me close said, you have such a wide range of interest or maybe such a short attention span. And to me, we get to invest at this early stage in anything from blockchain to nutritious donuts. So I get to have an exposure. It keeps me sharp. It keeps me energized. It keeps me learning, which is amazing. So I love it.
And one point of clarification here, just for our viewers and listeners. So, the headline here is, you're funding founders outside of Silicon Valley, but you also fund, founders in Silicon Valley. Like, you're agnostic there. But the point is that, well, first off, correct me if I'm wrong on that. Yes?
You are exactly right. We do not discriminate against any geographies. Every geography is willing to apply. But it's important to know that our center of gravity is in Texas. And while we absolutely have some founders that came to us from Silicon Valley, even in this current cohort, majority of our founders do not fit the traditional stereotype. 50 miles from Stanford, probably a young guy in a black hoodie with a computer science PhD. I love them. I welcome them. But that's not how every founder that invest looks like. And the point, I love that you highlighted outside of the Silicon Valley, because that proves to people that new centers of gravity for startups, for venture capital emerging, and Austin is without a doubt one of them.
So talk to me a little bit about Austin, because I feel like a lot of people, I'm in LA and a lot of people are moving to Texas. Like, why choose Austin? What's important about that hub to you?
I am a naturalized Texan, super proud. And in a way, Austin has several things going for it. Really strong technology talent. Because we have the outpost of Google and Apple and Oracle. So you could have this great engineering and fantastic university, very business-friendly laws. It's big enough where you could have a lot of various professions coalesce and kind of just big enough in terms of the actual space to take it, but small enough where people are still very friendly and you could, with one or two connections, discover someone. And my business partner, Joe Merrill, he is originally from Silicon Valley. So he grew up there, literally in the wine country, and kind of then spent his youth there. He saw a lot of, Silicon Valley was always prominent, but it was more dormant, I would say, in the late 90s until it really exploded and took off in the early 2000s. He saw a lot of leading indicators that led him to believe that investing in startups in Austin right now would be a fantastic thing. And we called it 6 years ago. And then, of course, right around COVID, the whole universe had moved here. So right now it feels like I don't even need to prove that Austin is a great place to start up. But here we are. I think the thesis was that new centers where the money will come, the talent is already there, and the companies will emerge and the business communities will support them, will emerge, and Austin will be one of those that already showed up on the map. We're here.
So I want to speak on behalf of maybe other founders and just founders in general out there for a moment. And I think one of the questions that, kind of is pretty assumptive is that maybe like most founders should be seeking venture capital, or that's a thing they need to get to that next level. So I guess, kind of point blank, like when does a company know, in your opinion, when maybe they should be going the VC route, when they should be considering it? And I know that's a broad question. So, and it's going to be different in every, situation, but high level, like when should a company be seriously considering that?
Adam, this is a great question. And let me even build on that. Let's also add if the founder should be seeking.
Oh, if. Right? even better.
Right? Because I think you have to figure out, it all starts with your goals. First of all, if you look at how venture capitalists like myself make money, we're looking for companies that have potential to become unicorns. So when I am looking at the company super early in its development, I have to see that magic wand and everything else goes right. This could be a unicorn, this could be an industry changing idea, and this could be the founder that will have the chops to take it there. That actually does not apply to every business. And you might have, like, listen, if any one of the listeners will build a business that puts $50 million in revenue, takes half of it to the bottom line, employs people, has great culture, you have accomplished way more than most small businesses out there. And you will not be the right one. If your ceiling is 50 million, you probably will not be a good venture business because my model breaks down. So if you are starting a business, that could be a consulting shop, that could be a bakery, that could be a hair salon, that could be an AI human facilitator, whatever it is your chops, but you don't have to aspire to be a unicorn for you to run a good business and add a lot of value. But if your ceiling is not a unicorn, you may not have a lot of good luck with venture capitals. And I think that's kind of to consider this, what you're trying to do. The second thing is your best money and your best first money are always from your customers. That is not the universal axiom, but most of the time. The reason is you're going to discover whether whatever your great idea is, whether someone is willing to pay for that, right? And that is a very, very important consideration that people often forget. And so when you get your first revenue from the customer, not only you will discover, well, I actually like it. My business is self-sustainable. I could grow at the pace I like. And you own most of your company, all of your company. You also are more attractive to venture capitalists because you've shown that there is a sliver of the market that absolutely needs you, desperately needs you. Now, there are many ways to get it. You could go to Kickstarter, you could basically old-fashioned way, you could sell, you could market, you could go to the business partners. So I think this is another consideration. Now, if you are wanting to grow really quickly, and when I say really quickly, in the venture capital terms, quickly means 10% week over week. And you want to take over the world. If what you're building is truly the new Google, is truly the next Stripe, then I really encourage you to talk to the VCs and try to pick a good one. I mean, we could go and tackle on what does a good investor look like? How do you pick it, him or her? But I think the point is, if VCs are not for everyone, and VCs, it's not always a good place to start just with VC. Go sell some product, go discover what your customer needs, and you're going to be bigger company at a more attractive valuation that will be more attractive to VCs.
I actually think that's a very relevant question, and I want to get to that one. So what should a founder be looking at in a good VC? So give me a second on that one though, because before that, I do want to, and that could be next, but I do want to kind of say, like, so from the founder's standpoint, I stick with that a little bit longer. So Oksana, what are some of the things that you look for in, like, or that you think are a good business to invest in the terms of you searching for these unicorns? Like, what makes a unicorn in your eye?
So let me uncouple that, because I think many people will look at the different parameters. So what we usually we invest really early on. So at Sputnik, we typically are the first investor. I sometimes joke, after friends, family, and fools. Often we're the first professional investor. And so we're usually looking big idea. Remember, I mentioned my magic wand early on. Everything else goes right. You have no constraints of any kind. I could see that this is $1 billion business in valuation, that I should see that you're making at least $100 million in revenue. So your market should be big enough. Your idea should be big enough. You should be the founder that I could see could grow with this, because it's a very different story. You're tinkering your garage with the idea that could take over the world, because you actually leading a big organization that is taking over the world and adding a lot of value. So from that perspective, we are certainly looking for that. We are looking for idea that is meaningful and produces a lot of value. And a lot of my business partner, who's an economist, he likes to bring people back to economic concept of the consumer surplus. What are consumers willing to pay for the product versus what are you actually charging for the product? So for instance, all of us familiar with Facebook, which is free to most people, but most of us probably would pay, knowing how it presents, probably will pay some dollars a month, maybe 10, like the price of 3 coffees, to stay in touch with all of our friends all over the world and be able to exchange the photos and do all that jazz. So you look at any of the social media that we are so active on, we would have paid some money to actually be president, but we don't have to. So that's our consumer surplus. So we're looking at that. We're looking for a founding team that we think could grow and could grow together. Usually a hustler and a hacker is my favorite combination, but we love to teach nerds how to hustle, how to sell and scale.
Yeah.
Big idea, strong consumer surplus, big market, and the founding team that could grow was the idea. Those are the 4 things that we always are looking for.
Oh, and I got a new term today, Oksana. I'm taking that with me. We look for a hustler and a hacker. Yeah. That's awesome. I love it. So now circling back to the question that you posed, which I think is now very relevant, which is, okay, so that's one end of the thing. The other end of the equation, let's say, is, you're a founder out there, you meet that criteria you're thinking about, okay, you're watching this interview and you're thinking about, okay, maybe we should really start seriously considering the VC route. What should these founders be looking for in an early stage investor?
Yeah. I mean, this is a great question. And I think not enough founders are asking that question. While raising money is daunting, and to be frank, it has to be, because I'm investing on behalf of the people who have entrusted me with their pensions. So my fiduciary duty is to be a good steward of that money. Venture capitalists and any investors need the founders just as much as the founder needs venture capitalists. So I think that's really, it's a business relationship. It's a relationship, and no relationship is ever just give. Good relationship, in life and in business, a give and take, and where you could grow together. Because of that, I always encourage founders to interview your investor just as much as the investor will be interviewing, because we are discovering fit. And investor has to bring money, but also, do they have experience in this field? Do they have the connections that would help me open doors? Will they teach me something that I don't know? Will they introduce me to people that will elevate my perspective? Will they be good, fair business partner? Because let's face it, when you take on an investor, it's easier to divorce your spouse than divorce the investor. This is a long-term relationship. All of those things matter. Yeah. And so because of that, you have to make sure that you are getting with people with the right expertise. They've played in this industry before. In other words, test them for competencies, if you will, but also test them for chemistry. Because with the right investor, we are going with our founders through thick and thin. Like, look, it just even recently, the Silicon Valley Bank collapse, where we have been tackling everything from 7 a.m. on the phone with the founders, trying to figure out solution, trying to look up the laws. One of the founders was actually in Europe, where he's a U.S. citizen, was a U.S. company, but the business is domiciled in Europe, a different time zone, waking up and living through the day when everything is closed in his time zone, and oops, you no longer have access to your money. So this is just a day in a life of founder with investor, and good investment partner will be right there with you. And so you want to be testing for that. You want to be looking for the stories. I always encourage the founders that we invest in to go and speak to our alumni, because I'm not for everyone, and I shouldn't be for everyone. So you have to discover, how is she in the meeting? What is she like? Was she helpful? And based on that, what's the team like? What's the environment? Do you like other founders, that alumni? There are a lot of questions, because you are in many ways buying into an ecosystem, even though I'm the one that is paying you money.
And I want to switch here just a bit and jump around just a bit. So I know you mentioned a couple of things about Sputnik ATX, but I do want to go a little bit further. So you're investing in, you're looking for the next unicorns. You're looking for big businesses, and businesses that have the potential to get really big, I should say, and become the next unicorns. And you're also definitely an early stage early stage investor, getting in there, investing pretty early on. Take it further. Tell us a little bit more about maybe whether it's industries, or just tell us a little bit more about the firm overall and the firm's vision.
It was a pleasure. So our vision, we are generalists, first of all. We've started with the insight that we love nerds. Being a physicist by training, my business partner, Joe Merrill, he is even a bigger nerd. And we love life-changing nerds, and we wanted to support them in business. What we realize is that outside of the Silicon Valley, where the lore on how to start up is basically being bred through osmosis, and you probably could bump and have coffee with a lot of people that live this either directly or vicariously. Outside of Silicon Valley, those rules are underexplained, let me put it this way. So here we are as investors telling the founders, here, Ms. Founder, go change the world with your life change idea, and we won't explain to you how the game is played, right? And that, I think, is not fair. So we've studied a lot what had worked in the Silicon Valley. We've took a lot of inspiration from the really venerable shops like Y Combinator, like Benchmark, and Andreessen Horowitz, and what they've done well. And we've internalized a lot of that for our system that identifies really breakthrough companies early, selects them, and teaches them how to sell and scale, and then gets them started in the startup game. Jokingly, at some point, I've explained, okay, we run kindergarten for gifted and talented startups. That's what we're in the business of. And that is not incorrect. So because of that, not many people specialize in kindergarten. As I've mentioned, as long as we see your ideas powerful and we like you as a founder and we see a strong consumer surplus, and you have a product and a customer, we don't take anyone earlier than that. If you don't have a product and a customer, you're too early for us. Then we could consider you for our investment, and then we will teach you how to sell and scale. Okay.
That's great. It's a great story. And one thing I want to also just have you maybe elaborate a little bit as you kind of go through, the vision is the idea of non-traditional founders. So I don't want to assume that everybody knows what that means. Now you did give an explanation, the typical, let's just say, type of founder that may go to Silicon Valley, maybe already knows the rules, right? Maybe he went to school in the Ivy League, or he or she, and, maybe that was their route, and they, they're already on that path. So they know. But for those that don't know the rules of the game, tell me a little bit more about what you consider like a non-traditional founder.
Yeah. If I could pause that question and mention to you, because I don't like to lead with that, I want to finish with this. It's very interesting, because as VC, my duty is to deliver the best investment outcomes for my investor. That is my only duty. When I come and I sit with this chair as a venture capital, that's my goal. And we're very good at this. And so I would quote that, we have more than 5,000 startups applying a year, and through various channels. We invest in about 10 a year. We do it twice a year. We've invested in 61 companies. Almost more than 85% of them is still in business, and we're tracking to 84% IRR. You probably, if you have money, should be saying, great, where could I sign up? Okay. And I can end my story right here. However, what is interesting, if you look under the hood, we are extremely diverse. We are diverse geographically, gender diversity, race diversity, nationality diversity, pretty much any diversity you're going to throw at us, we're going to eat it for breakfast. We are more than 50% of our founders are either women or minority led. We are 10 times national VC average investors in Black founders and twice national census. Those are some of our best performing companies. I think more than 43% of our companies are women led, and a story could go on. So to me, my commitment is to spectacular returns. But if we're looking broader, if we're actively courting the founders that the rest of the world might be overlooking, or maybe not courting to come and visit with them, you're going to get great returns, because we're literally picking, Adam, we're picking the cream of the crop of the people that the rest of the world had overlooked because they had a really good supply of more traditional founders. And listen, I never discriminate against anyone. If my last 5 Stanford computer scientists, guys in their late 20s to early 30s, they're going to get my check. But interestingly, if you look at the world broader, you discover that spectacular founders could come from anywhere in the world.
Wow. And that's so interesting to me, because it's kind of counterintuitive to maybe the way some people think about it, but you're proving it, and you're proving it with your returns too, and you're proving it with everything else. And the way I see it is that the diversity of ideas, so obviously the people are diverse and everything that you said, kind of in your rundown of stats, but the diversity of ideas that come out of different communities, different geographies, to me, like everything that you've been talking about today in terms of your mission and really making improvements in the world and moving the needle and improving the quality of people's life, and the marketplace, of course, that's exciting. That's inspiring.
I absolutely agree. And I think it's important. Again, that's why I stepped away from, I always like to talk about performance before I talk about
Yeah.
Diversity, because if you look at pure diversity, you say, oh, like she has a diversity mandate. I'm proud of our diversity. We publish it twice a year, but my number one mandate is to produce the top returns for our shareholders. But it's interesting that if you look at the world not through a one-dimensional lens, you find that diversity is your secret weapon.
I want to jump around again and shift topics here too. We're not going to, and just for everybody watching this, just so you know or listening to this, we're not going to do a deep dive on this. But part of this interview is bringing Oksana on to our show to introduce her to our community and also to announce the upcoming book. So Oksana, we're going to bring you back on the show, of course, for a second interview where we will actually do a deep dive into our upcoming book that we're co-authoring together. But just keeping it high level, what are some of the things that you hope to present in the upcoming book?
That's a great question. And having just finished that chapter, I'm excited to talk about this. I think my industry is really unique in how we think. In most of the world, and also as humans, we are generally encouraged and trained to give the negative as much or more weight as the positive. What could go wrong versus what could go right? Usually for everyone that is what could go wrong, you're going to need 7 what could go right to feel emotionally equal. Yeah. And that's how, if you are, in your relationship, in your career choices, in your education choices, in your pretty much anywhere, most of the world has those things balanced. As a venture capitalist, if I apply that thinking, I lose. And so in my job, good VCs will help founder discover what could go right. Not poke holes, because it's super easy. They're like kindergartners. Remember, they're business kindergartners. So you could poke holes and flank almost every single one of them. My job is to figure out what could go right and encourage them to go for that bigger journey. And I think that is a really fantastic way of thinking that in the book, I gonna invite people on a journey to have some time in their life and their calendar that they're committed to, where they could only think about what could go right. They could fly, they let themselves fly. Because I think we don't allow ourselves to fly, and we feel shackled way too much in our daily life. And as a VC, you are being trained and you're being pushed to think like this because that's the only way you win, from my perspective. And if you look at the big bettors, they look at, my biggest mistake is the mistake of omission, not mistake of commission. And for most people, that's not their daily life. As a result, it's not their daily intuition. So I'm going to endeavor to encourage people to think more about what could go right.
Yeah. I'm going to cut you off there. I'm not going to ask follow-up questions intentionally, because that's our cliffhanger for the audience today. We'll be bringing Oksana back on. Don't worry, because we have plenty more questions. And when we bring you back on, by the way, obviously the book will be live then. People will have it in their hands. They'll be able to read it and interact. So all good there. Well, Oksana, I just have to say, having you on the show today, it's been a pleasure. I welcome you into our community. And I just have to ask, what's next? What's next for you? What's next for Sputnik ATX?
Well, I'm glad you asked. There is always, when you are surrounded by people that change the world, that rhythm is very contagious. And for us, we're super happy with our performance in Fund 1. And as our kindergarten is growing and moving into primary and secondary school, we're raising Fund 2 that is going to invest and double down on the winners that have discovered, and so we could build this pipeline and support these founders going further. So that is a huge next personal challenge for me in supporting the founders and raising that fund. So that's the next chapter. So stay tuned for that.
Oh, that's exciting. And if somebody's watching,
investors, listening, like I'm easy to
absolutely. And what I was going to say is, so, if somebody's watching this or listening to this, Oksana, if they want to follow up, whether they're a founder looking to apply or they're an investor looking to maybe get more involved, what's the best way for people to connect?
Well, my super secret email, Oksana@SputnikATX.com. Also our website, SputnikATX.com. I'm obviously on LinkedIn, on Telegram, on WhatsApp, on Twitter, and Instagram. So please connect, whichever medium works for you. I am there. Not obsessively there, I might add, because most of the time I like to spend with my founders, but all well-written notes usually get answered.
Fantastic. And we'll put all that information in the show notes so that our audience can just head right on over by clicking on some links. And speaking of the audience, if this is your first time with Mission Matters or engaging in an episode, we're all about bringing on business owners, entrepreneurs, executives, and experts and having them share their mission, their journey, why they do what they do, what we can learn from it so we can all grow together. That's the whole point of Mission Matters as a platform, is really learning so we can all grow together. If that's a type of content that sounds interesting or fun or exciting to you, we welcome you. Hit that subscribe button, because we have many more mission-based individuals coming up on the line, and we don't want you to miss a thing. And Oksana, really, it has been a pleasure. Can't wait till the next time we get to do this together. So thanks again for coming on the show.
Thank you so much, Adam.